Welcome back, investors. Today we are doing a little stock showdown. I wanted to do a comparison of two heavy hitters in the payment industry. We all know Mastercard and Visa. Pretty much anywhere you go, any store, even local small businesses, virtually everywhere takes either Mastercard or Visa. Most everywhere takes both. So today I wanted to go through these and look at them in comparison to one another. I've mentioned in previous videos how important it is when you're looking at some of those quantitative factors like key ratios, price earnings, and profitability, that you compare them to either rivals in the same industry or at least broadly to the same industry. Of course, these two stocks, they operate in the financial space. However, they can't totally be compared to banks because of the different nature of their business. They do integrate with some of the things that banks do. However, they function primarily on the interchange between the consumer and the financial institution. So we're going to kind of dive in. Again, not necessarily comparable to banks, but it's going to change some of the different things we look at compared to some of the past videos we've done. Again, I want to do a bank stock specifically so that I can go through the things to look at with those. So I believe either later this week or next week, I'll be doing a video on Bank of America Corp. I got a request for that in one of my comments, and so I definitely want to honor that and get that produced here soon for you guys. And, just that to say, if you make a request, I try to ship something out pretty quickly because, again, it helps me to find stocks that I wouldn't have thought to look at and to look at things with fresh eyes and hopefully unbiased. So hopefully, if you've got something you want to see, just let me know and I will get that out to you guys. So interestingly, I couldn't find market share information, but as far as how they sit on the S&P 500, Visa sits at around 15 as far as market share goes, and Mastercard sits at around 18. This changes, of course, depending on their market capitalization because it's a weighted index, but something to consider. As far as current price goes, Mastercard trades at a much higher price, but as far as their last 5 years of growth, it does also have a higher increase in share price, whereas Visa is a little more muted. I will say that Visa's tend to be a little more along that same path, whereas Mastercard has really made some big jumps in the last 5 years. So, if you're looking at it from just a technical perspective, you're looking for appreciation in share price, then kind of here we see Mastercard has looked better over the last 5 years. Analysts rank it better, and we'll see that here as we're scrolling down. I look at the ISS governance score. Again, I just like to get a general feel for how the company is viewed by some international organizations. Mastercard kind of comes away with the win. And just to clarify, Mastercard will be all the information on the left. Visa will be all the information on the right. And when we get down into the actual comparison sections, I have tried to color code some of that so that it's, we hopefully don't get it all mixed up. Mastercard will be on the top typically. Visa will be right underneath it so that we can compare them against each other. So Mastercard comes away 5 and below, which is great. Visa's 5 and below on everything but audit, and we'll get into some of the audit stuff. I am kind of confused why they got a 10. I get what the concern was by the auditor, but I honestly had a bigger issue with the concerns from the auditors on Mastercard. And something else to know, I don't know how many annual reports you've read, but Mastercard has a beautiful annual report. Just colors, and every section is labeled out nicely, and they've got all sorts of graphics. Visa also has a very pleasant looking 10K filing. It's not as, eye-catching, I guess, because Mastercard uses even a different font from most annual reports. And that's something that I guess is kind of lacking in most 10Ks, as most of them are pretty boilerplate, plain Jane, black and white, really no graphics or anything. So I don't know if it's a good thing or not. It definitely, makes you lean more positively towards a company when they have nice coloring and everything else. So something to keep in check when you're looking at it is you want to try to digest it impartially instead of letting it be swayed by simple color patterns. But that to say, as far as profit margins and operating margins, Visa ekes ahead here, right in par with each other. So I'm not terribly concerned for one or the other, but definitely something to consider. Return on equity is significantly better for Mastercard. I think part of that, as we'll see, is that Mastercard has significantly lower amounts of equity compared to Visa. So maybe that's part of it, in that their rate of returns are roughly the same, but one has a greater portion in equity. And so that brings down that percentage. I'm not sure if that's the case, but I'm sure that has some factor in there. As far as past 5-year growth and next 5-year growth, relatively the same. Analysts are leaning more towards Mastercard growing, higher and faster. As far as share price grows, maybe that'll be the case. I'm not sure on that, though. I'm interested to see how that pans out. As far as operating cash flow and levered free cash flow, Visa definitely comes out ahead here as far as decreasing expenses, lower debt, and being able to kind of hold more cash on hand. And so both of them have healthy numbers, though. Just the fact that they're positive is a great sign. And then the fact that, solid double-digit $1 billion worth of cash flow going back into their business or paid out as dividends, which I guess that would be done before it turns into free cash flow. So something else to consider there. So I apologize if that was a little misstated. As far as price earnings goes, people have paid roughly 30 times the earnings for both of these companies. It's a little higher for Mastercard. And then as far as the projected forward price earnings, it's projected that people will be paying still a considerable premium for Mastercard, whereas Visa will only be at 23 times earnings. So that's a bit more of a discount, I guess. As far as PEG ratio, Visa also kind of comes out on top. They're roughly in the same ballpark, though. So, 0.06 is not really tipping the needle one direction or the other as far as their price earnings growth. Price to book, this is a place where Visa really shines, in the sense that, they have like a fifth of the price to book. So definitely a better value on the Visa side. And of course, this price to book looks at just the general book value. And so when we get to tangible book value, I think you'll be kind of surprised like I was. As far as price to sales go, right in the same ballpark. I prefer to see one or less, but as far as these two being the main competitors and the main kind of essence of that sub-industry for payment processors, I'm going to kind of take it for what it is and say that this must be somewhat normal. Again, I'd like to see it lower, but they're roughly the same. As far as dividend amounts, Mastercard has paid more, but it's a lower rate. As far as looking to the future, again, Mastercard's going to pay more, but as far as the actual dividend rate, it's a lower percentage of the share price. And something a lot of people don't think about is that dividend rate, dividend yield, that only matters on the day that you buy the stock. They project these amounts out, not project them, but they post these amounts, and it's based on that fixed date's price. Well, price changes daily, and so that yield or rate is going to end up being slightly different. And so if you can get a higher yield because the price drops a little bit, then, you can come out a little more ahead of this, maybe actually get 0.8% on Visa. Of course, you'd love to see a little higher. More insider ownership on Mastercard than Visa, considerably. And so that's always a nice thing. That kind of shows some insider sentiment. So Mastercard definitely has a little leg up there as far as how insiders view the company and the fact that they want to own the stock. And I tried to format this a little better for us. And here, I want to see if I can get this to show. There we go. It doesn't look like it saved all my stuff, which is totally fine. We can come back and look at it another time. I'll come back up here. Really wasn't a lot to see as far as that went anyways. And I'll come back to it. But as far as our current ratios go, Mastercard and Visa roughly run around the same. Visa has had slightly higher current ratios throughout, its historical. It's decreased by less. The fact that they're decreasing is never a good sign, but part of this is probably going to have to do with the litigation that they're dealing with, both of them. Let's see here. I posted it in a different section. That's what it was. So really all I had in this working capital section was current ratio. Quick ratio is not going to be applicable because there is no inventory on the books. So, that's your current ratio where the assets minus inventory over current liabilities. So nothing to record there. There's no inventory, which is why the quick ratio doesn't really work. And so, your current is all you're really going to get out of the company. So as far as working capital goes, that's the main thing we want to look at. Something I want to consider here, you always want to look at this to see, okay, companies like to report a stable current ratio. They want to be able to maintain it at similar levels, plus or minus 2 or 3% is really fine. But you want to see how they're maintaining that current ratio. And I think something we'll see here is we're getting into this capitalization section under working capital, this orange section, that the debt to equity levels for Mastercard are significantly higher than the debt to equity for Visa. Now, as far as the amounts go, Visa has much higher, stronger numbers. I feel like they both have positive equity, so that's a good thing. Mastercard's debt amounts, I think, are roughly the same or slightly less than Visa's, but we want to look at the debt to equity to see how many dollars or cents in debt you have to dollars in equity. And of course, you want to see easily less than 100, but also, if you can see 40 or less, that's really your ideal sweet spot. So the fact that Visa is running at such a lower rate than Mastercard tells me that they're in a much healthier position as far as their debt goes. Now, of course, we can look at that compounded average growth rate there on the right in those outlined boxes, and we see that Visa's debt to equity ratio has increased by 6%, whereas Mastercard has decreased theirs by 1.13%. So, of course, that does lean in Mastercard's favor. But, again, I think you can increase by 6% if you're still under, 70%. You've got a very healthy position to be in. I'd like to see it go down. But, again, they're sitting at a much better spot, I think. As far as debt to assets, this is one of those areas, again, we have to take out quick ratio and stuff, so maybe we want to look at some other places to see how these companies compare, since so much of the company is in the assets they have on the books. In terms of, they don't have a lot of property, plant, and equipment. Really not a lot of intangible assets for either, which I was surprised by. Most of it's customer relationships and, maybe trademark. So the fact that they're both roughly similar spots there, 25%, 24%, 35, 23. So a little bit high debt for MasterCard, but it is actually decreasing compared to Visa. And again, we want to look at debt to assets because that's going to kind of tell us how much debt there is for every dollar in assets. So both of them in fairly healthy positions. MasterCard, again, has actually decreased theirs more significantly, whereas Visa has had slight increases. And then I also wanted to look something different here. We usually don't look at assets to equity, but with the structure of their businesses, it makes sense to kind of look at, okay, what are the assets in terms of how much equity is actually on the books? And this is one of those places where I think we're going to see part of the disparity between MasterCard and Visa, because Visa has such high equity on their books compared to MasterCard. They have really similar amounts of assets, if I remember correctly. But MasterCard has twice as high asset to equity, and the biggest part of that is the smaller amount of equity on the books. So of course, assets equals liabilities plus equity. That balance sheet has to balance 1-to-1, and so assets are on their own side and liabilities plus equity is on the other side. So that's why we did assets to equities. We want to see what percentage is actually what percentage of assets equity represents. And so, neither percentages we're getting here are great, but we see that, there's a large disparity. As far as tangible book value per share, this is where I kind of got pretty concerned about both companies, honestly. So book value per share, we'll just look at, the assets minus liabilities kind of thing. Well, tangible book value per share, we're going to look at what the company is worth if you take out all intangibles and all of the goodwill. So, maybe they made some acquisitions and they paid a little extra, so they had to book it in the fact that, well, we bought it for more than their book value or for what the maybe even fair value of that business was. So we have to book some goodwill because we don't actually have the book value equity, book value in assets on our balance sheet. So we have to book some goodwill, which is, again, it's part of the balance sheet because it's got a balance, but also goodwill's really kind of nothing, personally, in my opinion, the way I see it. And so the tangible book value, especially for, this financial sector, is important because we want to see how much, actual money is sitting in the company. Well, neither company looks good. You have these negative thousands of dollars per share in tangible book value. So part of that has to do with the timing of acquisitions, the timing of taking on debt, and those kinds of things. But I'm not impressed by either. But of course, you look at MasterCard and it's minus 610% over the course of 5 years. One of the difficulties, of course, with the compounded average growth rate is that negative numbers don't work very well. So even these percentages, might not really represent it in a great way. So definitely take that with a grain of salt. And, you can take the numbers, pull them from Seeking Alpha, or even calculate it there on Yahoo Finance or wherever else you get your financial data. And you can look there and, recalculate that for yourself. Either way, there's not really a rhyme or reason to either number. I mean, MasterCard is clearly just straight line declining at almost an exponential rate, and Visa's kind of bouncing around. So, I mean, not a great pattern to look at there. Hopefully when we look at Bank of America, we have, kind of a clearer picture of a tangible book value per share. And of course, I don't want this to run too long. I know that really long videos are hard to sit through, But, I definitely want to get through everything. It's harder when you have two companies. There's a lot of things to explain. But we're going to get into our last section here, which is profitability. So, of course, we start with earnings per share. I like to do diluted just because it's going to give you a smaller amount. And it's going to take out some of those things like treasury stock and some of those other factors. So both have an increase over the last 5 years. Mastercard definitely has the edge here, almost 13%, and then Visa at 10%. Both have healthy growth in terms of, moving along over the last 5 years. Both of them had a little dip there in 2020. Most companies did. And that's one of the challenges using just 5 years of data right now in 2023 is you look back in 2019 and 2020 and you have some really weird numbers, so patterns can be hard to find. And so maybe it'd be more beneficial to run it at 6 years or 10 years if you can. I only have access to 5 years worth of data. I could go through all the annual reports for 10 years, and I've done that before, but it's just really tedious, and I like to be able to get these videos out. As far as revenues go, Mastercard also increased their revenues at a higher rate. In terms of stability, they both run around the same place. Visa is definitely bringing higher numbers. And so steady growth for both, but again, it depends. You're going to have a larger amount of, dollars in revenue per dollar in share price with Visa compared to Mastercard because it's trading at a lower value. So that's something to consider. Interesting thing, of course, is that Mastercard doesn't list in their income statement a cost of revenues or cost of goods sold. And so that's kind of interesting to me that their gross profit, it's basically just their revenues. They put what their revenue is and then count it as gross profit, but don't count any of those costs in their income statement for what they spent to get those dollars in revenue. So I was a little concerned by that. Again, it shows that same increase of 8.26%, whereas Visa's bottom line on gross profit increases by 7.47%. So a slightly lower gap between the two, but also the fact that they're factoring in what the actual cost was to get those dollars. So Visa with a little more transparency there, I feel like, and a little more steady. As far as operating margin goes, this is where Visa wins out. Mastercard has some increases, but it's pretty flat, honestly. Negative 0.17%. So really just running right where it's been at. Whereas, I guess Visa is actually pretty flat too, 0.07. So you have plus or minus 0.20 really on either side. So pretty flat for both. Some dips there and then kind of bouncing back after around 2020. So, not great numbers there. You want to see consistently growing. But again, stable is better than decreasing. So we can live with it, I think. So I noted there, so I put in here my noteworthy stuff. I did actually read both annual reports, skim through the whole things. And I say read, but again, I did mostly skim. There's a lot of information in there. And I do a lot of these videos. So there's a lot of annual reports I'm looking at. So something to consider is that, you can definitely read and you're going to find more stuff than I'm going to list here. And I want to scroll up here just to point out, I'm just going to click the cell right there. So fiscal year end is different for these two companies as well. So Visa ended in September. So they're going to have an annual report coming out here probably October-ish. And then Mastercard's probably not going to see till like January of next year that we're going to see the annual report come out. So there is going to be some staggering of data here in terms of when their fiscal year ends. So that does make them a little difficult to compare. Just take that with a grain of salt. And of course, we could look at quarterly reports, but those are often either not required to be audited or at least not audited at the same standards with an outside firm than annual reports, which have very strict auditing requirements. And so I don't love looking at quarterly reports because it's not going to give you at least as in-depth information if the company doesn't have to, if they're not subject to someone really digging through their books. Again, Mastercard has a beautiful looking 10K annual report. Visa's is very pleasant on the eyes as well. I'm going to go through Mastercard first. Actually, I want to go through Visa first, and then I'm going to jump back to Mastercard. Some similarities here, of course. I was interested that Visa is getting into tokenization of digital transactions as part of their move to make transactions more secure for people, replacing some of that card information in the transaction with kind of a tokenized way of recording it. So not moving into cryptocurrency, but moving into tokenization to ensure, maybe they can compete a little better if they can show the same level of security in the transactions. Both companies, I listed it here in Visa, they mentioned it a lot, is the EU litigations that are going on, the types of regulations going in place that are really cutting into their bottom line. This is something that's kind of a big challenge in the payment processing section. And part of that is the challenge of effectively being a middleman. Everybody points to the competitive advantage of these two brands. But also, I think more and more people are looking at this and saying, do I need to pay a fee every time I process a transaction? Which, of course, yes, you probably do, because someone has to process and, maintain the security of that transaction. But the EU, even in the US and stuff, there's a lot of attempts to cap the amount of fees, which is good for the average consumer, of course, but also changes things for these companies. I noted in Visa's annual report, they make a more kind of fixed comment on it about this omnibus agreement. And basically, if there's a large settlement against broad, payment processing, and it involves both Visa and Mastercard, there's basically this tentative agreement that's subject to change over time that Visa will pay 2/3 of the settlement costs and Mastercard will pay 1/3. I think part of that has to do with the relative size and importance in these cases. And so that's something to consider, as Visa is on the hook for a little more than Mastercard in these situations. As far as long-term debt for Visa, all of it is, they have some 4.3% that's not due until 2045. I think they had 4.01 that's due in like 2037. But everything else due in the next really 10 or 15 years is sub 4%. They have very favorable terms on their long-term debt. I was really pleased to see that in terms of when their payout dates are, nothing super huge coming up. They also, and this is part of the audit, you see it here in the bottom square, but you also see it at the top right, is in the audit, the main concern they had was the accrued litigation liability. MDL was the acronym there for accruals. And the auditors note that some of the litigation has to do with unascertainable amounts. So it's hard for them to put a fixed cost on what they need to accrue for contingent liabilities. But I am pleased to see that they have these settlement reserves, that they're ensuring to the best of their ability that they've set aside these cash reserves for these instances in which these contingent liabilities actually surface. So, and MasterCard does this as well, but Visa definitely makes it a point to clarify and show, I feel like, a little better, a little more transparently what their plan of action is for these. There's some more notes on Mastercard than Visa, and again, just part of, going through and finding stuff. So one of the risks they put, that they placed a little more emphasis on, and I don't remember Visa even mentioning it, but maybe it was just kind of tucked in there, was the risk of digital currencies to their business model. They're also worried about government-backed networks. So in Brazil and South Africa, there are these government-backed processing networks in place that are basically, their local exchange that, kind of pushes MasterCard to the wayside. They also have some concerns with real-time account-based payments networks. So in the UK with the Bank of England, they've been reprimanding MasterCard's VocaLink is what it's called. So that causes some major concerns for MasterCard, is because one of their subsidiaries is having problems. It also has more recent, a greater amount of recent acquisitions. So that probably plays on the books as well. Part of their large decrease in tangible book value has to do with these acquisitions and probably the goodwill being paid. I didn't do a lot of digging into these subs that they've been buying, but definitely something for you to consider when you're looking at the numbers here. On their audit, the auditors noted revenue recognition for rebates and incentives, and the fact that it requires a high degree of judgment by management to be able to ensure that, when these rebates or incentives are cashed in, that they have enough money on hand for them. Visa really doesn't get into any rebates or incentives. Mastercard comes back to it multiple times throughout their reports. Something I noted here on their long-term debt, they have $275 million in this INR term loan. It's at a rate of 9.09%. That's the effective rate, and it's due next month in July of 2023. So, that's something to consider. When is the debt due and at what rates? So that's a really high annual rate. The rest of their rates were pretty favorable, I felt like, but I feel like theirs is a little shorter term on the long-term debt. They also have $1.6 billion of foreign earnings that are invested outside of the U.S., and then they noted that the determined taxes or any future repatriation of those earnings would be immaterial, is the word they used. Of course, things that are material would make major changes to financial statements. So I'm not sure how $1.6 billion is immaterial, but that's what they noted there. So these are things you catch in the notes section of an annual report. Are things that maybe you as the investor consider to be material. $1.6 billion to me is material, even for a company of Mastercard's size. They also have litigation down in Australia, and I think somewhere else as well. The issue of limitation of competition comes up quite a bit with Mastercard. So I think they've gotten a little more hot water, not just for the rates they charge for processing, but for some of their business practices and some of these other areas. They also are being investigated by the Federal Trade Commission, the FTC, for potential breaches of the Dodd-Frank and Consumer Protection Acts. And that was as of June of 2020. Both companies have lengthy litigations against them since 2005, 2006 that are ongoing. But this one kind of concerned me because the Dodd-Frank and the Consumer Protection Acts those are very recent legislative actions, and also very severe penalties come with those. So something to look at. And then they also noted in there, when you're looking at their litigation reserves and stuff, there's $54 billion in litigation exposure that's not arranged for by Mastercard. They note that in there, that they've arranged for like $10 billion, but then there's $54 billion below that after it nets out that they don't have a strategy for. So that could definitely play negatively if those contingent liabilities actually materialize in the near future. So that to say, that's what I've got right now on these two payment processing titans of industry. I definitely want you to draw your own conclusions. I'm not trying to give investment advice, but hopefully this has helped you a little bit when you're thinking through how to value at least some financial institutions. Next week, we'll get into Bank of America, and we'll see how more on that traditional banking side, how things are valued. But in terms of these two financial companies, hopefully you've got a clear picture. You can do, your own analysis with this. Of course, like I mentioned, Visa's annual report will be out in October, which is just a few months away. So, definitely go through some more recent data, see what's changed. And of course, if I've messed up anything, said something wrong, looked really stupid, or you have questions, comments, concerns, drop those in my comment section. I try to reply really quickly to those, and I want to address those. I had someone mention in a past video I kind of sounded a little condescending, so I definitely want to make sure I'm not doing stuff like that. not necessarily call me out, but let me know so I can continue to improve these videos. I'm really impressed with how far these have come so far. When I look at some of my earlier videos, it's so elementary, rudimentary, just basic. And so I feel like I've really gotten to a place where I can provide some greater value to you. And hopefully in turn, you're learning, I'm learning, we're all getting better here. Of course, as always, I'd appreciate it if you like this video, if you'd subscribe to my channel. That benefits you as well. I don't want you to miss out on future content, especially stuff that you might be maybe even more interested in than necessarily Mastercard or Visa. And of course, if you have suggestions or requests, let me know and I will get those churned out for you. As always, I appreciate you. I appreciate you checking out this video. If you made it this far, I wish I could give you a high five and a hug right now. And of course, as always, dig in and invest well. I will see you next time.